All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So what a move in the markets. And you're going to hear this all weekend, right? Is it going to be a Black Monday? Markets selling off very sharply on the anniversary of the original Black Monday, 1987, 36 years to be precise. That was actually October 19th. And we had the bottom fall out today. So, that is kind of characteristic of October. But markets here in a lot of trouble. And we saw some selling here. We had that bottom from the 6th. We had a nice little squeeze up, and we just couldn't hold those gains. And I talked about this on my channel on Monday. I never really liked that gap up that we had. And we didn't really build any support on this move up. It was just kind of a squeeze there. And, I've also laid this theory out where you could just have a 1, 2, 3, 4, 5 down. You get those 3 pivot lows, and then you could possibly put in a low here. And that is, sort of playing out currently. We also did close below that 200 period moving average for the first time since March. You're seeing it right there on the SPX. So that was lost on a Friday close, so a weekly close no less. The positive here for the bulls is you're holding this green bar. So that low is 42.1955. You never closed below that, and you never closed below the previous low set on the 3rd. So that's your positive right now for the bulls. But there's some serious problems going on in this market. If we take a look at the yield, we'll start off with the 30-year as always. The TYX here, this has been obviously the story. And it's just been running away here. So market finally realizing that, this interest rates are a wrecking ball, and it's finally starting to reprice some things here, specifically real estate and financials. Right now, I do not like what I'm seeing in the KRE. I told you guys it's got to stay above this pivot on a weekly close, and that has closed below with heavy volume. So 44 million shares traded on Friday, and we closed below this pivot too. So the KRE is in a lot of trouble. These interest rate sensitive assets are in a lot of trouble here. We talked about, and by the way, KRE, they have access to BTFP, right? And they're still breaking down. So big problem there. VNQ, commercial real estate, RE, real estate investment trusts, back below that trend line there on another weekly close. So again, another secondary close. We did close above that pivot from 2 weeks ago, so that's your positive. But again, I've been pointing this out for a while. Look at that red bar, inside bar pattern, and it's starting to head lower. So these sectors, XHB, home builders, right? I said, guys, don't buy this 200 moving average. If we get down there, it's going to be minor. And that should get into the 70 handle. It might even get down to 68.50 now. So these interest rate sensitive sectors are finally starting to crack. I would recommend everybody keep an eye on credit spreads here. So, and you can it's on the St. Louis Fred there, and you can just Google it, honestly. But if we start getting above, I would say 4.5, this right here was the regional banking crisis in March. And obviously, if the Fed didn't do something, we would have had big problems there. So I'd say we start getting above 4.5, and this is as of Thursday's close, by the way. So this isn't taking today into account. I don't know where it is today, but if we start getting above 4.5, we start to shoot up, there could be problems in this market. Again, another area here, look at JNK, junk debt. Weekly does not look strong at all. We are at 52-week lows essentially, and we're not that far off of the October lows. HYG, same thing. LQD, that's in the double bottom, and actually I believe that made a new multi-decade low, I believe, yesterday. So the low was 98.27. Yeah, so we made a new multi-decade low. You got to go back to the GFC, guys. So junk debt not looking so hot. What is interesting to me too is if you look at TLT. Now this is something else we got to get into. The TLT was green today, up 47 cents, with the spiders getting whacked down one and a quarter. Let's take a look at. I want to talk about the spreads here with interest rates. So 2s and 10s. Look at where they were at the beginning of the week and look where they are now. Only inverted by 16 basis points now. 3-month and 10-year also working in the right direction here, only inverted by 55. This type of thing can happen. when the bond market starts to sniff out a slowdown, or when the bond market starts to sniff out something breaking. Generally, it's not a bad thing for spreads to normalize, but if they do so very rapidly and they do so for the wrong reasons, it can be a big negative. But right now, look at that spread between 2s and 10s, starting to tighten very, very quickly. I would say things are, normalizing, and it could be bullish. But when I see the things I just showed you, credit spreads widening, KRE, VNQ, XHB, these sectors acting very poorly, and then you see the XLU having a big rally off the lows. These are risk off, this is a risk off sector. XLP having a big move off the lows. That was green most of the day up until the last half hour when everything just got slammed. I mean, you can see here in the last half hour of the day, everything just got smoked. But the risk off sector is starting to kind of behave like a traditional risk off, TLT up when the market is down. That's how the market's supposed to behave. Lately, the market's been selling because yields have just been ripping higher. But right now, we're seeing potentially a little bit of a traditional risk off. Again, it's hard to say what's going to happen on Monday. Could we have, could something break? Could there be a bankruptcy announcement? A hedge fund get blown up over the weekend? That's certainly possible. Maybe somebody knows something. But right now, I would just advise caution here. And I do think we are in a pocket of weakness. I've talked about this possible zigzag down. A lot of people are calling for an end of year rally right here. And I do think we will see some type of end of year rally. But you know what? Sometimes if enough people get on board, they got to stop them out and take them lower. There is a lot of support right here on the weekly of the spiders, or the SPX rather, same thing, right in this area, 4,100 to 4,180. So there's a lot of support there. You got the 50-week moving average, 100-week moving average, but you got a weekly inside bar pattern, and that can go lower. So we'll see what we get Monday. You're positive again. You didn't, you lost the 200, yes, but technically you never took out that low. And we'll see how this shakes out Monday. We could still bounce. And we also have the Fed meeting in not next week, but November 1st. So again, we'll see what we get here. I would prefer to see a little bit more of a flush before some type of a rally. That's just kind of my preference. I think you really need to just run those stops, and that's how you can get a kind of more concrete low. I would think if we gap up Monday, it could just be a gap up for selling. But in any case, big slam there on the markets, back below that trend line, back below the 200. And right now, to be honest, you're not even oversold. I mean, there's your 20-day. We were just through that yesterday. So this thing can go lower. At the same time, you got to be careful. If we get any sort of good news, the market sniffs that out, it can squeeze. So keep that in your mind as well. This is an environment to be defensive, not offensive, and let the market tell us, what to do here. But anyways, let's look at the triple Qs, down 1.5 on Friday here. You could make a case still. You have a falling wedge on the triples. So, I would say 350 area could be support. You don't want to see this pivot go on a weekly close, though. And the reason I say that is because I think it has a date with 320 if that happens. Again, no support here on the way up. It's just a squeeze, and it can go down as quickly as it went up when that happens. Additionally, again, weekly inside bar pattern, 1, 2, 3, and then a drop there. By the way, that 618 was perfect, wasn't it? So we talked about this. There we go. Last week. Right there to the low, to the high, to the penny, into that trend line. Beautiful resistance, beautiful classic setup there on the triple Qs. But we'll see what it does Monday. There should be at least some short-term support right around that 350 handle. Now, the Russell 2000, I do not like. That still's got to go to 165, maybe even a pierce of that. And then that's, again, you can see that head and shoulder target. Perfect. And it's almost there. I would assume it's so close at this point, it's probably going to get there, maybe even on Monday, especially if we gap down. And then really after that, it's double bottom. Again, if we look at the weekly or the monthly, I've been saying this for a while, this is just a big bear pattern here. So Russell in a lot of trouble, and breadth is not good in this market. And again, interest rate sensitive equity, small caps, they can't raise capital, and we're seeing that reflective in the share price. Dow here. Back below this pink trend line again. The positive is you're above this green bar here and the low. The negative is you're back below all the moving averages. So again, trend is back down in the Dow. There should be some support at 325. Again, that's your measured move target there. So we'll see how it acts if and when it gets there. But again, Dow down, just like everything else. SMH here down 1.5 today. Everybody's going to talk about NVIDIA. You do have a head and shoulder there. It is in play, and it did trigger today on the weekly. So that is a weekly trigger. One thing I will say though is a lot of people are going to bring this up, and when this stuff gets brought up a lot, sometimes you can get too many people buying puts, and then you can get a squeeze. But at face value, that pattern's in play. And I mean, if there's bankruptcies or something like that happens, like I suggested before, it kind of won't matter. It'll just go down. But yeah, that did trigger here today. So watch that. But the SMH may have a date with the 200 MA, and ultimately I think it fills this gap at 129. Cloud software held up really well. Again, it just became a victim by the end of the week. This is still a strong sector, believe it or not. It's holding up better than a lot of things. But again, the whole market just got dragged down on Friday. So down 2.5. You can make a case. You got a little wedge here. So we'll look for some support there on Monday. But if this, especially if this pivot goes on a weekly close, it's going down to 315 and maybe 305. It did sell off on pretty heavy volume, by the way, on Friday. Dow Transports, that's going to 14,000. So we talked about that. It had a nice reversal. Or we sold, or I'd say last Friday I did the video. So we were right here last Friday. Said we needed to bounce. We did. We couldn't get above 15,250. It didn't even really get close. And we rolled back over. Funny enough, this was actually flat to positive on Friday here. But let's be honest, it's not a good chart. You close below this pivot. On a weekly, I think it's going to 14K. Interest rates we already touched on just a little bit. But again, I'll quickly go over. So the 2-year did pull back in. So you can see the spread tightening. 2's coming in. 5's coming in. 10-year coming in a little bit, but it's up more, made a higher high. 30-year came in on Friday, but up more, made a higher high. So the spread's tightening there. My question is this starting to show risk off by the yield coming in? So that could be something to watch. I think yields are getting close to an interim top anyway, because you look at the monthly, we are completely parabolic there, and the same thing on the 10-year. So keep that in mind. All right, XHB we already talked about, but again, you can see that needs to go to 70, maybe 69. ITB we don't really cover anymore, but that could probably go to 70. VNQ. What can you say? You got a whole double bottom next week. Otherwise, this is basically a blue sky breakdown. I would just say maybe $70 is your whole round number next area, but definitely some weakness. XLF closing below the recent low, so not a good sign there. Still needs to go to 32, maybe 31.50. KRE we talked about. This is in breakdown mode. So this may need to go all the way down to 36. KBE should have some support at 34. And then if you don't hold that, it's down to 32. Broker dealers, that's got to go to 450. Lower low there. Doesn't mean you can't hold 460 here in the near term, but I think ultimately that's your bigger level. All right, over to commodities and energy. And always we start off with crude first. So crude, little contract rollover this week. And it's trading up. I told you guys 89.90 would still be resistance, and it got there today. We got to 89.85, and we pulled back in. Nothing major. We never closed above this breakdown bar, but it's holding up. I'll say if this puts in sideways consolidation, it can get through that. But right now, this should be resistance, and it should need to do some backing and filling. Right now, I just have crude in a range, and it's holding up. If you take this low out, then it can go down to 78. If you take this high out, then we can talk about much higher. But I think it's got to do some weekly consolidation, most likely, at least for a little while, if it wants to move higher. But no real problems. But short term, 90 should be a cap here, unless we can flag up and then move higher. XLE, XOP, and OIH also having good weeks, but they did pull in on Friday. Again, kind of messy charts here. I don't like that we squeezed up like that, but again, I think all, pretty much the whole energy sector doing daily and weekly consolidation. Uranium as well, CCJ down 15 cents on Friday. I think that's got to do weekly consolidation. I don't like how we lost that green bar on a weekly close, and the URNM as well. Again, just a lot of resistance up here. Needs to let those moving averages catch up. Net gas continuing to pull back here. That was down 1.25 on Friday. This is your breakout level. We came up on the contract rollover, and that's where it broke out. So we'll see if that can get a bounce here this week, as it was unable to hold the 20 moving average. But nat gas coming in, and really that's the level right now that I'm watching. Anyways, dollar index, surprisingly uneventful for how much action was going on this week. But, the dollar, we talked about this, it's into some weekly resistance. We came down, we pivoted up, and then we came down, we bounced, we pivoted up, and then we went back down. And that's where we went 2 weeks ago, and now it's just going sideways here. So it is into some resistance. If we look at the daily, you got a decent little bull flag there. If this consolidates enough, I can't rule out the dollar advancing again. So this is weekly chart resistance, but if you consolidate enough, it can go higher. Next level would be 108, and then really like 109.25. So dollar's holding up. If this takes out this green bar, then we could talk about 104.50, 104 even. But dollar hanging in there okay. Really this week the story was yields, not so much the dollar index. Another story this week, take a look at gold continuing to power up. So all the way back to the 2000 handle, didn't quite get to the 75% retrace. Very close. It got to a 618 and then pulled back in. These pivots here should be some resistance. It is a little short-term extended, but big move there for gold. I told you guys for months 1825. Needed to get tested, and it held. And it is acting well here. We'll see what kind of pattern it puts in. It might need to pull back a little bit into this trend line, maybe even into 1900. But yeah, it's had a nice pop off the lows. Silver as well did take some profits with members here on PSLV today. In fact, really not that far off the highs here. We got pretty much the exact low, which was nice. But in any case, silver pulling in off 24 and stalling out right at that. Actually, we closed above that 200 moving average today and the 100. So nice recovery there for silver. Not above the 20-week moving average. Again, I think short term, just a little extended. Near term, we'll look at 22.50, and then maybe 22 would be your pullback levels there for silver futures, but that is acting well. Platinum, I'm still waiting on pattern for this. I think this could have one more drop in it, but I don't think it has much lower to go. But platinum, basically sideways for most of the week. Palladium is getting interesting though. So this is continuing to just hemorrhage here, but look at this. I love this level. So you get into that sub 1100 area, 1,000 to 200 month moving average. I like this area on palladium. I'm hoping it gets down there. Copper here also on the weaker side this week. I still think that needs to go down and test 340, maybe even 330. But nothing really too new going on there. All right, Bitcoin lastly. What a week here. So we had some... So I believe it was, Monday, we had some fake news about the ETF. I'm sure you all heard by now. But what was strange is that it held the gains. And what I was just saying today in my video on my channel, the last time that Bitcoin, so we know this move right here and this move today has nothing to do with the ETF, right? Because that was fake news, but it's holding the gains anyway. Now, if we look at the KRE, that broke down today. That is a breakdown. The last time that this broke down, and Bitcoin really ran was right here, right? We were at 25,000. We ran to 30, basically 32,000 on Bitcoin in the same time that KRE went from 60 down to 42.50. Is Bitcoin telling us something? Is Bitcoin acting risk off finally? That certainly could be the case. Keep that on your radar. What I am watching, though, is this pivot right here, and you're going to notice that is a weekly red bar. If we close above that on Sunday night, that's a negated weekly red bar, which would then defer me to the monthly, which means that's a bull pattern. So lo and behold, Bitcoin changing the script here and acting well. We'll watch that going into Sunday night on the 8 p.m. close, but Bitcoin turning the script around. I told you guys 30 would be resistance. That's where it stalled out twice, but you made a higher high. And we'll watch this one for pattern. So Bitcoin acting differently. Again, this is another signal here. Is there some risk off event coming on? Anyways, lastly, real quick, spiders here, or SPX, daily close below the 200, positive for the bulls here, is you got this green bar and you've got this weekly level that has not been negated. The negative is that the bottom fell out of this rally, and we're seeing weakness in key sectors: KRE, XHB, VNQ, JNK, right? And we're starting to see a flip here with treasuries. Are treasuries going to finally act risk off? If they do, could be something serious down the pipeline. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.